Welcome back to Market Fatafat, a show where we are highlighting all the counters that are buzzing in trade, either on the back of the news flow or on the back of the technicals. And continuing with the same, let me welcome on board Kunal Rambia with us on the technical front. Very good afternoon, Kunal, and thank you so much for your time. The first counter that you have picked up on charts is Emphasis. The IT counters are seeing good moves in today's trading session, but what specifically on Emphasis are you spotting at this point?
Hi, very good afternoon to everyone. So if you look at the Emphasis chart, recently we saw the correction of almost around 19% from the previous high. And now counter made a consolidation bottom near to the level from where it first gave the breakout. And mind you, this breakout is actually on the 14th of July. And the level was 2070. Just 2 days back also we saw the levels of 2070. And from there, now we are seeing the trend continuing again. So I think this is a good bargain buying opportunity for someone who wants to go positionally long on this. The stop loss can be 2065. And the positional target on this can be 2350 and 2400 in the time to come.
Those levels for Emphasis, and moving on to the next one, we have another earnings candidate that's in focus, and that's Piramal Pharma. When you look at it in terms of the company, yes, they've reported an 11% growth on a year-on-year basis, and consolidated revenue came in at 1,911 crores rupees. Now, this is mainly driven by strong performance across the segments that the company saw. Other than that, in terms of the company, when you look at it on the bottom line front, the company actually swinged into a profit this time of 5 crores versus a loss last year that they had reported. Net debt at the end of September quarter was at around 3,823 crores. Management commentary in terms of that, what they're highlighting is that the CDMO business returned to mid-teens growth with continued order inflows. India consumer healthcare business also is delivering a steady growth. That's the word coming in from the management. So positive commentary, decent set of numbers that has come in from the company as well. And that is what is keeping a stock abuzz as well today, up 3.7% as of now.
Okay, Kunal, once again coming to you for an IT counter, and that is Wipro. How are the charts looking like for this one?
Again, same the bargain buying opportunity on this counter also. It's a massive rounding bottom formation. The previous bottom on Wipro was somewhere on 20th of June, and that level was around 375. Just 2 days back, again, this counter tested 375, and now it's bounced from that same level. So I think one can initiate a buy on this with extremely favorable risk-reward ratio, stop loss being 372. And one can expect the bounce till first level as 395 and above that 405.
Okay, so that was about Wipro. Again, a buying opportunity in this one. But moving on, let's shift focus to Aavas Financiers. Then, in this particular counter is in focus as Elara Securities has downgraded their rating to a reduce now from a buy earlier, and they have also lowered the target price to 1,460 rupees from 1,678 rupees earlier, and that's why we are seeing the stock actually declining in trade, down with a cuts of around 4% as of now. That's Elara Securities, but we also had the earnings, and this time around the earnings didn't look that great for the company, and on the back of that the disbursements are yet to gain the momentum, even as the NIMs were seen to be contracting, though their AUM did grow 22% on a YOY basis, but they were actually below the street estimates as well. So miss on the earnings, and that's why brokerage is going ahead and downgrading the rating on this particular counter.
Okay, let's move on and talk about Cipla, Ankita. Yes, we had the numbers that came out on Friday. We saw a move, decent numbers. Anything specific coming in from the brokerages?
That's correct, Vinny. Cipla reported a rather interesting set of numbers. All the numbers were above the estimate. In fact, they even raised their margin guidance to 24 to 25%. However, we did see a note coming out by Jefferies and Cipla, but they are downgrading the stock to hold from buy, and they've hiked the target price from to 1,230 rupees from 1,210 rupees per share. And they feel that the lower OPEX is, has been driving the beat on the quarter 2 results. The US sales have grown 4% sequentially, but they turned out to be better than expected. The Indian businesses can witness a 12% CAGR on a 5-year period. The EBITDA margin guidance has been revised up for the year yet again, that I mentioned at the beginning. And there is a limited upside post the recent rally, and hence they're downgrading the stock to hold. But we do see the impact of the solid set of numbers coming in for Cipla, and the stock is up 2% in trade today.
Let's move on and actually pull up the charts for NIIT Learning. The company reported its numbers as well. We saw a good bounce back coming in terms of the Q2 performance for the company. The company saw that the margins also saw a sharp uptake. Operating performance seemed to be much better versus last year as well. And look at the stock price today as well. A sharp spike up we've seen in the last half an hour, up 2.37%. But to talk more about their numbers, what should we be expecting from the company going forward? You know, will these margin levels actually sustain? We're joined by Vijay Thadani, Vice Chairman at and Managing Director at NIIT Learning Systems. Good afternoon, sir. Thank you so much for joining in with us this afternoon. I want to talk about the bounce back that you've seen in Q2. Now, do you expect this performance that you've seen, the bounce back that you've seen, to continue in the second half of FY24 as well?
Yeah. So actually, as we had guided, we were expecting a much better second half than we are experiencing as we are going through the second half now. Now we are announcing the results of the second quarter, but we're already in the second half of the year. So in this case, we do see that there is an uncertainty in the environment. The deal flow is accelerating. I think that's what is very meaningful. We got 4 new managed training services deals. But there is also a compression and kind of a freeze in consumption of our existing customers. So the impact of both these will definitely result in a quarter-on-quarter sequential improvement, though very small. And I think for the year, we are now looking at early to mid-teens growth in revenue.
Okay, hi, very good afternoon, Mr. Thadani. This is Shrishti also joining in. Firstly, congratulations on a good set of numbers, but the macro trends suggest that there is a bit of a drying out of the client spend. Is that something that you are witnessing as well, and any sense on how the client spends are likely to pan out in 2024 calendar year?
Okay. I think I agree with you with the fact that there is a drying out of client spends. But it depends on what activities. There are activities in which the client spends are increasing also. For example, in emerging technologies such as AI and impact of AI and how our organization works, and digital transformation, which is an activity which has been going on, or transformation going on for the last few years. So in these, there are increased spends, number one. Number two, there is a higher propensity to outsource. Given the uncertainty in the environment, people want to variabilize their expenses as well as find ways by which they can tune up the organization with the needs of the hour. And therefore, we are seeing that in the demand pattern that we see, and also visible in our results, which is we just talked about the 4 new MTS customers that we added. Our overall revenue visibility is at $350 million. So yes, while there is a pressure on current consumption of current customers, but I think newer customers are adding to the growth project.
And sir, you've actually maintained that momentum of adding 4 clients this quarter too. Could you just tell us a bit more in terms of the nature of these clients and the requirements that is coming in from them?
Yeah. So the work that we do is to do with L&D outsourcing, learning and development functions in organizations. And they outsource their activities to us, which is essentially to continue to scale the organization to meet the needs of the current times. And different organizations have different transformations happening. In fact, we were discussing in the board meeting, it's been a long time since multiple transformations are happening in the organization. Take the case of artificial intelligence and generative AI. And this is causing all organizations to see how do we improve the effectiveness, how do we improve our customer experience, how do we increase our efficiencies. That itself causes a transformation pattern. Now, that requires their people to be trained again, their people to rethink about how they would like to look at their customer experiences, as well as their overall market penetration strategy. So we get in at that time. The increased cost pressure that they have in their organizations, given the overall business uncertainty, and I'm talking of all global clients and I'm talking of Fortune 1000 companies, then they look at which is a function which can move at the speed at which the environment is moving and deliver and yet not, put a heavy stress on the organization. That's when organizations like NIIT Learning Systems become more valuable, because we can align ourselves with the way the organization wants to transform itself, and also come with agility and workforce as well as resources which are required to make that happen. So that is the result that is visible in the accelerated customer acquisition process that we are noticing, and now it's for a couple of quarters more that we have added 4 new MTS customers.
Okay.
All this will contribute to our future.
Sure. Okay, Mr. Thadani, before we let you go on that, quickly just wanted an update on your guidance. So going ahead, do you see yourself delivering with the margins that are upwards of 20% and the long-term revenue growth guidance of 20%? Do you believe that the company will deliver on these lines?
Yes. At this point of time, we are ahead of those margins, both in terms of growth as well as in bottom line. End of this year, I think our overall growth in revenue will be in early to mid teens, and our margin will definitely be in excess of 20%. In fact, more like the margin that we have seen so far, which is 24%, will be a little bit impacted, maybe 50 to 100 basis points because of salary increases, etc., which happen at this point of the year. So answering your question, long term, 2020, I think we remain committed to. In near term, this year the margin is likely to be better than 20%, and growth I already mentioned.
Thank you so much for joining in with us this afternoon on ET Now, giving us an understanding in terms of the company. And obviously, this year we could see better margins coming in from NIIT Learnings. That's the word coming in from the management. Let's move on and talk about the next stock that is in focus, and keeping it going with that, Kunal, City Union Bank. That's the stock that you've picked out for us on the charts. What is the specific indication you're getting on City Union Bank? What are the charts now indicating here?
See, if you look at the overall formation on the chart from Feb till now, I think the sideways consolidation is what we can see. But at the same time, the interesting observation is that it's making a curve formation, and now the counter is near to the second end of the curve formation, about to give the breakout, and the volume activity is also picking up. So considering all these observations, I think one can initiate a buy at the present level itself. The stop loss has to be around 128. It's a slow and steady counter. The breakout is definitely pending, but the first target on this can be 141, which is its breakout, and post breakout one can expect the targets of 155. So yeah, it's a long-term bet, but offering the best risk-reward ratio as of now.
Moving on, then in Harsh, AU Small Finance Bank is the counter that you have picked up. Tell us why is that so?
Well, yes, AU Small Finance Bank in focus because Fincare Small Finance Bank has merged with AU Small Finance Bank. At least the announcement has come through with regard to that merger. What's essentially happened, or rather what essentially is expected to happen going forward, is you're expected to see shareholder, RBI as well as CCI approvals, which is Competition Commission of India approvals, coming through with regard to the merger. Merger is expected to take effect 1st February 2024. What it adds to AU Small Finance in terms of what business does it add to AU Small Finance Bank? Well, it brings in an MFI book, which is microfinance book, largely unsecured. It takes the unsecured portfolio of AU Small Finance from 4% to 11%. And what AU's commentary that's come through is that they will continue to maintain that 10 to 11% kind of loan mix on unsecured going forward as well. Of course, it also adds a little bit with regard to the geographic presence. North and west focused is what AU is at. Fincare also adds a bit of twist with regard to south. But despite all of that, you can see the stock was absolutely dull in trade, continues to trade 4% lower.
Okay, that is AU Small Finance Bank. Let's talk about another stock that is in focus on the back of its numbers, is Mahanagar Gas. Today the stock is up and away in trade, and at 3.4 to 5% uptick even as of now. Now, what has happened in the company? Yes, overall the numbers, when you look at it, what the street was expecting was an inline set of numbers. Margins also saw a bit of a moderation coming in Q2, primarily driven by the price cuts during the quarter. But what was driving is the volumes. That saw a recovery coming in, and that is what is keeping the street a bit of on the positive side as well. Look at Mahanagar Gas sales volume that grew by 5% on a quarter-on-quarter basis and 3% on a year-on-year basis. CNG sales also grew by around 4% for the company as well. Within PNG, residential sales also grew by 4% on a year-on-year basis. Quarter-on-quarter basis, it was almost flattish. While obviously a decent set of numbers that came in from the company, EBITDA saw a bit of a decline on a quarter-on-quarter basis as well, moderation on that margin front, but otherwise the volume saw a recovery, which is maybe keeping the stock a buzz up 3.5% as of now. That's Mahanagar Gas for you.
Okay, moving on, and Kunal, the next counter on your radar is BHEL. Tell us how the chart's looking like for this one.
The overall formation on this BHEL chart is very clear. It's positive trend, and that's what we are witnessing since June 2022 so far. Yes, recently the counter went up significantly from 106 to almost 150. Now this correction is making again a clear higher bottom compared to the previous bottom. It's a bargain buying opportunity again. One can initiate a buy at the present level, stop loss being 113. I think the first target on this counter can be now 135, followed by the new high again.
Moving on then, and let's shift focus to Strides Pharma then, and the company did come out with its earnings, as well as there is an announcement on this particular front where the Strides Pharma rises as much as 3% on a 15 million Singapore facility sale, and on the back of this the company actually went ahead and recorded an exceptional loss this time around. But the drug maker said on Friday that this unit has entered into an agreement with another company, that is Reglizet Biohub, to sell its manufacturing facility in Singapore for $15 million, and that's why this particular counter is in focus. The company also registered an exceptional loss of 150 crores due to the impairment and the cost associated with the disposal of this facility, and that's why in the earnings this time, if we see on to the reported bottom line, the company has reported a loss of around 149 crores versus a profit of 20 crores on a YOY basis, though their revenue has seen a jump from 897 crores same quarter last year to 999 crores, while their margins have seen an inch up from 11% to 15.3% this time around. So would say not a great set of earnings this time around, and that's why we are seeing the stock quite subdued in trade as of now.
Okay, surely keeping an eye out on Strides Pharma. But let's move on and talk about Indian Hotels, Ankita. What is the number looking like for the company? What is the commentary coming in on that front?
Right, Vinny, today Indian Hotels in surging in trade. It is up 2.5% in trade, currently at the day's highest point. Now, a note came out in Indian Hotels by Jefferies, and they are maintaining a buy on the counter. They've also hiked the target price to 450 rupees per share from 445 rupees. They feel that all is well, and the management is reiterating strong industry outlook. They also feel it's a strong show for a strong, standalone business, and the domestic network is pretty strong. However, there's a bit of a drag coming in on the international operation front, led primarily by the US hotels. But for now, Jefferies is maintaining a buy on the counter, and we are seeing, the impact on the stock. The stock is running up 2%, more than 2% in trade today.
Okay, moving on, and let's once again shift focus back to Strides Pharma then, because Kunal, this counter is on your radar. While I did highlight that the stock is quite quiet in today's trading session post the earnings especially, but since Pharma is in flavor, how do you see Strides Pharma on charts?
See, again, the observation here is that for the entire year of 2023, the calendar year 23, there is a clear higher top, higher bottom formation, and the formation is actually a channel formation. Now, the recent bottom was of around 470, which is exactly the support for the counter. And post this result announcement, the counter is again offering this buying opportunity. I think this can be a good level to reinitiate the buy. Keep the stop loss of 470 and keep accumulating if the counter comes near to those levels. I think the positional target on this counter can be placed at around 540 to 550 levels.
Okay, keep an eye out on those levels for Strides Pharma as well then. And let's move on and talk about Union Bank. Harsh, this one too will focus on the back of its numbers.
Well, yes, absolutely, Vinny. On the back of numbers, you're seeing good numbers overall from Union Bank. Margins really sustaining in a quarter which is marred by some difficulty with regard to elevated cost of deposits that have continued to go higher and higher as we've crossed each quarter. And therefore, what we're seeing is your net interest income, which went up 10% year over year. Your margins are holding up quite well. Margins are 3.14% versus 3.06% for the first half of this year. On a year-on-year basis, you're seeing margins hold up very smartly, and you're also seeing recovery starting to come through. You're seeing roughly on Q2 of FY24 in terms of total recovery, it's come in at 4,250 crore versus the 3,560 crore number in Q1 of FY24. Overall, the bank seems to have met with pretty much all of its guidances, and you're seeing that after a spike in the stock price early off in trade, the stock has really tapered off, absolutely flat, largely in line with where the Nifty PSU Bank is trading at currently, Vinny.
Okay, surely keeping an eye out on Union Bank. Let's move on and also talk about KPIT Tech. This one reported its numbers just a short while ago. When you look at it, the overall performance of the company was quite strong. Revenues grew by around 9.3%. EBIT performance was strong as well. Profits seeing a good growth of 5.2% on a quarter-on-quarter basis, and EBIT margin seeing an expansion of around 60 basis points as well. What was interesting and what led to the further spike up was that in terms of the FY24 CC growth guidance outlook, they've increased that to 37% from previous earlier guidance of 27 to 30% is what they had said. EBITDA outlook also is what they have increased to 20% as well from earlier 19 to 20%. So 20+% is what they're expecting versus a 19 to 20% earlier. So that uptick in guidance, the hike in guidance is keeping the stock abuzz today.
Well, yes, great moves on KPIT Tech, but with this, viewers, we are completely out of time in this edition of Market Farafa. Thank you so much, Harsh, Ankita and Kunal, for joining us today and helping all our viewers, highlighting all the counters that are buzzing in trade. But the markets are surely buzzing, and the good part is indeed, Vinny, that the markets are still holding themselves in green. But with this, it's a goodbye from me, Vinny, and the entire team who put this show together. Thank you so much for watching.